Hi and welcome everyone to today's presentation at Investor Days. My name is Daniel Thorsson, analyst at ABG, covering IT and tech companies. And the first presentation we have now is with INVISIO and the CEO Lars Højgård Hansen. So I let you start your presentation, Lars, and we will follow up with some questions afterwards.
Thank you very much, Daniel, and welcome everyone to a short update on INVISIO. We are the global leader in communication and hearing protection for demanding environments. Our customers are found within military, police, law enforcement, and firefighting. And what they have in common is that they work in very difficult circumstances and often very high noise environments. And our mission is to protect them also they do not get hurt unnecessarily and they can live a normal life at home. Next slide, please. So we have, in a short period of time, during the past 10 years, become the global leader. We are approaching 1 billion in revenues on a rolling 12 months basis with a good operating margin. We did have some impact and delays because of the global COVID pandemic during the past 2 years, but now we are back on track and have a very strong start to 2023 that I will get back to in just a minute. But we are an innovation company, deploy the latest technologies. We are based in Copenhagen in the global cluster for hearing technologies. We have sales offices in the US, UK, France, Italy, and Thailand. And we operate two global brands. INVISIO is for users that operate in the field, and a brand called Racal Acoustics is related to hearing protection and communication in vehicles. This is a company and a brand that we acquired a couple of years ago. We hold a portfolio with long-term agreements and programs. Most of our customers are government customers, and therefore business is often done on a long-term scale with long-term contracts and programs. And our sales model is that we primarily sell direct, but also in certain cases through select partners. All of our manufacturing is outsourced, so we have an asset-light business model, if you like. And we have been listed on Nasdaq Stockholm since 2015, and we are now on the mid-cap list. Next slide, please. So as I said, we started 2023 very strong. Actually, it was the best quarter in the company's history after two difficult COVID years. We saw very strong order intake, sales, and profit, and I'll go through some of these parameters on the following slides. The order intake is a very important parameter for us because that's, of course, indicating the revenues and the sales in the coming quarters. And we have seen a strong development in our order intake and order book over the last year. For the third quarter in a row, our order intake now exceeded 1 billion SEK. And as you can see on the curve, there are sometimes fluctuations, quite large fluctuations between quarters. But when we put in the average 12, you see a good positive development in our order intake since 2019. What is happening now in the Q1 is, of course, also an effect of the increased geopolitical instability, especially in Europe with the situation in Ukraine. We are also seeing that INVISIO is a different company than before the pandemic. I will get back to that, and therefore we have a broader portfolio and more revenue sources, and therefore a better stability in the order book and the order intake. So order intake in itself was 350 million for the first quarter. Next slide, please. Yes, and the order book then leads to a very strong order book that has been increasing significantly, as you can see also here. Back in 2019, the order book at the end of a quarter was around 100 million. Now we are at 600 million. And so does that mean that we have difficulties in delivering? No, it does not. This is just reflecting that we have a very active market and a lot of activities going on. And since we work with outsourced manufacturing, I would say that deliveries is the least of our concerns. We have ample capacity, and deliveries are more guided by customer wishes, because customers sometimes have plans for how they would like to roll out our products, including training and so forth. So therefore, we deliver according to customer wishes. But the strong order book is, of course, also good for us, because now we have visibility some quarters down the road, and we are able to plan our manufacturing in a good way. We have a history of having a certain amount of inventory, approximately 140 million Swedish kronor in inventory, and we do that because it is a competitive advantage. Our products are standard products. They only come in 2 colors, and we don't have any scrapping normally, so we can have a good inventory, and that gives us an advantage, because we can see that especially at this time there is a demand for somewhat more speedy delivery of units, and therefore inventory is a key. Next, please. So revenue, we saw more than 100% revenue growth in Q1 compared to the same quarter last year, actually 119 in comparable currencies. And as I said, this is getting us close to 1 billion target for a 12 months period. So sales is definitely at a higher level than before. It should be said, of course, that the 2 COVID years were quite flat with a small growth, but not to our satisfaction. So we are happy to see now that things are getting back to normal. I should say also we have 2 financial targets. One is to grow our revenues with about 20% in average per year, and the other one is to have a sound profit with an EBIT margin not below 15%. And apart from the COVID years, we have been able to meet those targets. Next, please. Gross margin is another important parameter for us, because that allows us, a high gross margin allows us to, of course, invest further into new products and into the organization. And traditionally, we have been sort of in between 55 and 60% gross margin. We have an internal ambition to get up between 60 and 65. And as you can see, in the first quarter of 23, we actually reached 62.5, so we are within our targets. Now, we are impacted by the product mix. We have different types of customers and solutions where the product mix or the product marketing can differ a little bit. So we are a little bit depending on the total mix of solutions that we have during the quarter. But we have recently launched a range of new products where we believe we are able to take out a better gross margin. And we also believe that as we grow, we have more efficiency in our supply chain, which will help us improve our cost prices and thereby our gross margin. It has been a little challenging during the COVID period. As you all know, there has been component shortages on certain things that has given us extra costs. And now we've seen inflation and continued price increases, but we have up until now been able to compensate with our own price increases and with a good relationship with our suppliers. So a good start to the year. Next, please. Operating expenses is in line with the trend we have seen, and the operating expenses is primarily number of employees, and of course it follows the activity level, and it follows the revenue levels. So any further recruiting is driven by business opportunities, and we are still in a situation where many of our markets have very strong growth potential, and therefore we will continue to increase our organization in line with the increase in revenues, of course. Next, please. On the margin side, as you can see here, we had, as I said, a couple of tough years during COVID, where we actually went onto the wrong side of the zero line here. But we accepted that because we were quite sure that the underlying trends in our markets were intact. And after the COVID pandemic was over, we were quite certain that the markets would return to normal. So therefore, we kept investing in products and in the organization. And as we can see here now from the from the third quarter of 2022 into Q4 22 and Q1, we have now seeing the profitability go back to really strong levels. So we went from minus 2.8% EBIT margin in Q1 22 to 26.9% in Q1 23. And that illustrates the strengths of our business model with outsourced manufacturing. So as soon as revenues go up, then we have an immediate effect on the earnings. Yeah, next, please. So as I've been trying to describe here, we are now at the start of 2023 seeing a much stronger INVISIO than before the pandemic. We have continued to invest heavily in the organization and in new products. We have made a range of new products in all areas. We have broadened our offer. We have new customer groups and a broader customer base in general. So from having a rather focused approach to markets and products, we now have several areas that we are addressing that I'll get back to. And we have also, during the pandemic, acquired a company, Racal Acoustics, that I mentioned, that are the market leaders for hearing protection and communication in vehicles. And that has been a great complement to the existing INVISIO products. Next, please. For those of you not familiar with exactly what we do, here's a little short overview. On the upper left-hand corner, this has been the base and the starting point of INVISIO, where we do hearing protection and communication systems for people in the field, either military or law enforcement, police, and so on. And these are consisting of headsets, different type of headsets with hearing protection, and control units that can interface to the user's radio communication devices like walkie-talkies or intercom systems, or what they are utilizing. So this has been the core of INVISIO for a very long time. And then on the upper right-hand corner is the high noise vehicle solutions that we acquired through Racal Acoustics, that now gives us the hearing protection solutions, also with heavy-duty headsets for use in mobility, ground mobility vehicles, helicopters, boats, or in armored vehicles, etc. So this is Racal has been the leading brand for more than 50 years in this area. So it's a strong addition to our portfolio. And just before the pandemic, we introduced a very innovative and disruptive portable intercom system. It has the size of an A5 paper, approximately on iPad, if you like. And this is a portable intercom system that allows users to communicate in a group when they are on board a vehicle or helicopter or a boat, so forth. And this product is very relevant both for military and police and law enforcement users, where they are then able to have an intercom set up very quickly between a group of, say, 4 to 10 people. The system is fully integrated with our dismounted solutions and our vehicle solutions. So it's a plug-and-play system that we expect will be a very strong contributor to the INVISIO business going forward. And what ties all of our products together is cables that are intelligent. And by that, we mean that they have built-in information and intelligence that makes all of our systems plug and play. When you get them out of the box, you connect the cables, you put it on, and it works. There's no calibration, there's no manuals, there's no other difficult setup procedures needed. It is plug and play with the different cable that we operate. So that is a very important part of the system. Next, please. And we operate in a number of markets, as I said, market for users in the field, market for vehicles, the high attractive intercom market. And then when we talk about users, it's the military, it's the law enforcement and police. And in total, we believe at this point in time that the addressable market is around 14 billion Swedish kronor. It is characterized by high entry barriers. So those that are leading the market, like us, do have an advantage. It is characterized by only a few competitors, a handful of competitors at most. And it is also characterized by the fact that demand is driven by structural growth. So in almost all countries, there are modernization programs running for both military and law enforcement, police, where they are updating their equipment to more modern and radio communications and hearing protection and so forth. And then there's also another mega trend, which is a focus on hearing protection and damages and cost related to that, because hearing damages is quite frequent when you work in high noise environments if you're not protected. And that has a huge cost to societies in countries where, in terms of compensation and maybe even taking people out of service after long trainings and education because they have a hearing damage. So it is in everyone's interest to reduce the hearing damage impact on people and for the cost for society. So and then next, please. I think what we have all seen in over a year now, a new situation in Europe with Ukraine. And of course, this has a huge impact on the outlook for our industry. Even though we are not classified as a military company, we are commercial. Our products are commercial off the shelf. They are not defense or military per definition, but we do sell a lot to military customers. And here we have seen the largest increase in military spending in Europe in 30 years. We see that there is a huge need for modern communication equipment and hearing protection of the type that we have. And we see larger budgets everywhere in Europe especially, and we think this will allow for a faster rollout of our type of products. So there's no doubt in the longer term that there will be an increased demand for all of our types of products for the next 10 to 15 years in Europe. We also know that our industry moves a little bit slow, so it does take time. But there's no doubt that this overarching factor in terms of large increases in spending is a positive for INVISIO's business for the next 10 to 15 years. Next, please. So this is my final slide, and with that, I would say that we have carried out quite extensive investments in recent years, a lot of new products, a broad organization, and now we have a strong order book and a really strong and active market. And with that in mind, we predict continued strong sales, order intake, and good profitability for the remainder of 2023. So with that, I conclude my short update on INVISIO, and over to you, Daniel.
Yes, thank you very much, Lars. Obviously, I think the first question I have is that 2022 was a very, very strong year for you, but have we really seen the effects from increased military budgets across Europe so far, or do you expect it to come more in the future?
Yes, it's definitely in the future. It is far too early. And as I said, things take time. I think we hear in all markets that governments and military institutions are discussing how much to increase the budgets and what to buy in what order and so forth. So there's no doubt that this takes a little time, but it will be a significant game changer for our industry. I think related to Ukraine, as we've seen, what has been provided in the last year has been a lot of ammunition and defense systems and vehicles and so forth. But further down the road, there will be a need for many other things as well. And the vehicle industry, which of course is also important to us because of our vehicle products and the intercom, is where there is a lot of business ongoing right now for new vehicles.
Yeah, I see. And although your TAM is very large and you have penetrated less than 10% of it, what's kind of the replacement cycle or the lifetime of your products? How long time do they last?
Yes, our best estimate is sort of 3 to 5 years. Again, of course, depending a little bit on how much you and under which circumstances you use the products, because we, of course, know that they are being used in very rough and tough environments. So it is a little bit depending on, again, how much it is being used, and maybe rougher environments with military than with law enforcement and police. So, but in general, sort of 3 to 5 years replacement is what we calculate with.
Yeah, okay, that makes sense. Secondly, related to your penetration and the addressable market of 14 billion SEK, as you mentioned, the rest of the market that you have not penetrated or captured, is that kind of untapped potential, or is it competitors holding parts of that?
No, it is definitely. I think we have been quite conservative here. We in defining the addressable markets, we have looked mainly on the larger countries in Europe and in NATO, including US, of course. And so on. So we've been trying to be a little bit cautious here, but there is, of course, with the new situation in Europe and Ukraine, reason to believe that the addressable market could be a lot larger. But we have not put any time into that right now. I think we have the market is big enough for us to grow substantially and in line with our targets of 20% per year on average. But we will be looking at this going forward at some point in time.
Yeah, that makes sense. Looking at your pricing power, the gross margin was very good in Q1. It improved. What's your kind of pricing power, given that you're selling to public customers while you're sourcing components and products on the private market with current inflation? Can you pass it on to customers, or?
To some extent, yes. In most of the contracts and deals that we do, there is clauses around inflation and other price increases. So yes, but I think what we focus more on is also as we grow as a company to really utilize the buying power that we have and also the economies of scale and just being also better when we design new generations of products. We're constantly getting better at designing them for efficient manufacturing, so that we try to reduce the amount of time that is used in manufacturing, and also trying to use components that are good enough for what we need it for. So I think it is realistic for us to aim at 60 to 65%, but still keeping in mind that there might be fluctuations between quarters.
Yeah, okay, that's good. And looking ahead on your guidance for 2023, it's obviously a positive guidance on sales, also on order intake. But how should we view the order book? It's at really high levels right now. Is sales growth going to come from reducing the order book in the coming quarters, or can you maintain this high level and have an order intake matching the sales growth? Or
I think if you look at it now, Q1 was plus 300 million, and we had an order book of 600. So that means emptying the order backlog in 2 quarters, and I think that's fine. And again, we are always trying to match customer requirements for delivery. So and many of the customers we deliver to, they do need a little time to organize for training and logistics and everything else. So it is fine. We have sufficient capacity, but we will also not push anyone to take deliveries before they actually need it. So that's also one of the reasons why revenues could fluctuate a little bit, because they don't necessarily reflect our ability. It might be that it reflects what the customer wants.
Yeah, I see. My last question is related to M&A. You acquired Racal Acoustics in 2020, and you have a solid balance sheet. Are there anything else to do in the market? Can you acquire competitors, broaden the portfolio further, or?
I would say that it is a niche market. There are not that many competitors, and those that there are sometimes quite small and local or regional, and from a technological point of view, maybe not so attractive. So I would say that the number of M&A opportunities are there, but it's rather limited. So I think you will probably see us wanting to invest in our own organic growth and our own development. And as you say, we have a strong balance sheet, very, very strong financial position. So we have the means and the possibilities to continue to invest in areas where we see strong opportunities for future growth.
Yes, excellent, Lars. I think that'll conclude the presentation. Time is running out, and thank you very much for presenting INVISIO.
Thank you. Thank you.